All right. Good morning. Please, if you can hear me clearly, just type a yes. Send a yes. Chat. Hear me clearly. All right. Very much. So my name is Don Deyo. My name is Don Dale, and I'll be taking you on this morning market review. Yes, I've been on since, but I was just waiting for the numbers. All right, so let's start our analysis. All right, thank you so much. You can hear me? That's nice. Thank you so much. So let's start by analysis by looking at the fundamentals. The fundamentals are very, very important, especially when it comes to Forex markets. So today we have a couple of fundamentals, very important events that has just occurred earlier this morning. Let's quickly, let me share my screen so that you can see what I'm actually looking at. So I'll be using the Forex Factory. So I'm using the forexfactory.com. All right, so here you can see today, Wednesday. Today is Wednesday, the 31st of July, 2024. 2020. So earlier this morning, we had a CPI on the AUD, on the Australian dollar. Now, this news actually turned out to be exactly as forecast. But you'll be surprised to note that the Australian dollar depreciated massively. There was a massive on the Australian dollar based on that news. Now, that was very much understandable because of some indicators or some indices I will briefly discuss. And then earlier this morning also, we had the news on Japanese yen. That is interest rate decision. So for the second time in decades, the BOJ has increased their interest rate to 0.25 from 0.10. Right? So these are some of the news that has dropped so far. And all of these news that has dropped has a way of cheapening the market. The Australian dollar, the CPI actually was exactly as forecast. But something is happening in Australia that is causing the currency to. What we are experiencing or what you'll be observing in the Australia is that their economy is beginning to dwindle. Now, one of the ways you know how the economy is faring is by looking at the PMIs. So it is said that if a PMI is less than 50, below 50, then it simply signifies that the economy is contracting. For Australia, for 3 months consecutively, the PMI has been below 50. It has been declining. It has been on the decline. And that is as a result of elevated interest rates. So their interest rate has been kept high for a very long period of time. And then they made a statement some months back that they are likely to hike rates. But from the look of things, analysts and economists have said it will be detrimental to the economy to the hike rates. So with CPI staying at the same value, there's a high tendency that Australia will start cutting rates. Now, they are currently the only central bank who has not said anything about interest rate cuts. From the data that has been dropped so far, and the negative effects that it already experienced in the economy, high tendency that they will start cutting rates. So with that being said, Australian dollar is one of the weakest currencies. And we also have another weak currency as the CAD. Now, for the Japanese yen, you can see the increase in rates. I actually took a trade on this particular news on CAD JPY and the NZD JPY for a sell. Now, for those of us that still want to jump in, when we get to the technical analysis, you would see that there are still opportunities to sell any of the currencies that has JPY. So the estimate for the JPY was 0.1, but it turned out to be 0.25. Now, this 0.25 was leaked. Yesterday, there was a leak that the BOJ was going to increase to 0.25. Now, if I share, so let me just quickly show you something. Let me share my screen. So you will notice that yesterday there was a leak that the BOJ was going to increase the interest rates. And that was the reason why you saw the move. So for those of us that observe the move this morning, was yesterday. So you can see my screenshot. You can see this news. This was from yesterday, saying that the BOJ to discuss hike to 0.25. Now, the estimate was 0.1. So this was actually a leak. And if you read down here, you see something like this. So you see a statement like this. Look at this statement, that the leak overnight definitely raises the illusion of buying. So there was a leak that they were going to increase interest. That is the reason why, if you look at the way the market dropped when the news dropped, when the news came out, fell before the news came out. Before the news came out, it fell and then went back up, but now it's going back down. So that gives us an opportunity to buy JPY. So when we get to the technical analysis, see the opportunities that have available for us to sell, keep buying Japanese yen. By 10 a.m. today, we have interest rates on, we have the rate on the euro for the CPI. That's CPI on euro. That's by 10 a.m. And if you look at the estimate, it is expected to stay the same. The previous was 2.5. Current, the estimate or the forecast is 2.5. And from data that has been dropping so far, there's a tendency for the actual to be less than 2.5. If the actual becomes less than 2.5 or even equal to 2.5, then the euro will depreciate. Take note of that if the actual is equal to 2.5 or less than 2.5, so this is not a situation where I would say if it's equal to the forecast, then it's going to, nothing will happen in the market. No, there's going to be depreciation on any of the currencies that has the euro. And it is very unlikely for it to be higher than 2.5. Very, very unlikely. So this is simply because if you look at tomorrow, we have interest rate decision on the British pound tomorrow. And that interest rate decision estimated that interest rate will be reduced or will be cut on the pound tomorrow. And if that is the case, it simply means the data that are coming out this on the euro will likely be. So for the euro by 10 a.m., we expect the CPI. And from my own personal analysis and estimate, I'm expecting the numbers to be lower. I'm expecting the number to be below the forecast. And if that happens, then I'll be selling some currency pairs that has the euro. In fact, I'm already in a trade on the euro for it. Then later today, we have news on the US dollar. Now we have the ADP, which is non-farm employment change. Now this non-farm employment change can give us a clue as to what will happen on the non-farm payroll. So for those of us that trade NFP, if you know how to read the data very well, you can get a clue as to what non-farm payroll by looking at this ADP. So when ADP comes out today, it can give us a direction as to what will happen on Friday. And then later this evening, we have the rate decision by the Fed. And then afterward, we have the FOMC statement. Now, for the rate decision on Fed, it is estimated that the interest rate on the dollar will remain the same. Take note that we have 5.5. That was the previous. Forecast is also 5.5. If the interest rate remains the same, then dollar should appreciate. So we will see a massive depreciation on dollar. This is because the 5.5 forecast is already priced in. Investors and traders are already perceiving that this interest rate will remain 5.5. Now, if this remains 5.5, then September, they would have to cut interest rates. So remember that this interest rate is that's for this month. So estimated that by September, the first rate cut will begin to fall. Now, if this interest rate today remains the same, then dollar will depreciate. That's seeing the dollar depreciate against September rate cut. So with that being said, and it's estimated that if this happens today, then there might be 2 more cuts before the year runs out. So with that being said, expect the dollar to be. The 2 currencies we have looked at fundamentally, the euro, I'm expecting depreciation on, and then the dollar, also further depreciation on the dollar. So those are my views on today's fundamental analysis. Then for the press conference, which is going to be by around 7:30 p.m., we cannot really forecast what will happen during the press conference. It is the press conference that will give us the overall picture of what the Fed are actually thinking and what they have in mind. So what you want to do is during this period, you want to keep up to date with what is being said. And you can do that by watching it live. I usually watch the whole conference live. So this is just a question and answer session where the press will be asking questions and the FOMC members will be answering and all of that. So if you want to follow up with that information or that news, you can go to YouTube at 7:30 and then just type FOMC live, FOMC live, LIVE, FOMC live. Be able to watch post everything. The market will be very volatile during this period because of traders or investors are trying to get the perspective of the FOMCs, I mean the Fed. So please take note of that. And these periods are very volatile times. While you trade today, you want to ensure that you use proper risk management so that you are not caught unaware when these events are dropping. So that's it. And then I think the other high impact news we have by 3 p.m. is the pending home sales. Now, these pending home sales, so many persons do not trade the news, but it has effects. Remember that these data that drop, they do not have impact in the market in isolation. Yes, the effects are collective. These are whatever you see happening in the market, it's not because of one single. It's as a result of the others. Data are not used in isolation. Pending home sales, if it turns out to be negative, then the dollar is in trouble. Let's hope that it turns out negative, that we can have good trading of mixed. Then there might be some, less movement. But once it turns out negative, then we should see a trend ensue dollar. And so with that being said, let's quickly move over to the technical analysis. I know sometimes the fundamental analysis are usually very boring, but I have to look at that so that we can get a clear picture of what is happening in the market. So on the fundamental level, the currencies we've actually looked at is the Japanese yen and the US dollar. Fundamentally speaking, I'm saying the Japanese yen will be strong, the euro will be weak, and the USD will be weak. But the USD will be weaker than it. That is it. So let's now go over to the technical analysis. So we start off our technical analysis by looking at the dollar index. So please, if you have a question as the class is going on, feel free to drop your comments or your question in the chat box. As the analysis is going on, I will also be looking at the questions that has been dropped. So quickly to our technical analysis. So we are starting off with the dollar index. So on the dollar index, this is D1. So I'm looking at the monthly chart of the dollar. You can see very clearly that in the month of June, we're falling seriously on the dollar. So the dollar has depreciated massively in the month of July rather. So we can see how the dollar fell and even created a new low below last month's low price. So where my cursor is positioned is the lowest price from June. And we have created a new low below that particular low. Now, we've also gone up to a level which we might term as resistance. And some individuals will regard this as a resistance level. Some others will call this an order block. Some other persons will consider this a fair value gap. Or any which one you call it, you are right. The market has just hit a very significant level. Here is another block. Down here is a fair value gap. Up here, this is support and resistance. So we can see how the market has moved all the way up into that particular region. And when the market fills up a liquidity void like this, there's a tendency for it to be further. But just like I said, that fundamentally speaking, I'm expecting the dollar to depreciate. In fact, my level is all the way down here. So I want to see the dollar depreciate down here, but that might not be today. Remember that the month is ending today, and tomorrow we begin a new month. That being said, I have observed in the market that whenever the month is ending or the month has ended, there might not be so much move. All the moves that may occur as a result of the data or the fundamentals that we have looked at might just begin from next month. So We might see move, but may not so significant. But those moves will take full effect in the month of August. So August is tomorrow. So, but with that being said, I'm expecting the dollar to continue its trend to the downside, its move to the downside, and then take out this particular low. So you can see this low that I marked here with red. I want to see the dollar exceed this particular low. So this is on our daily, and for today being the last day of the month, you can see clearly that today, Wednesday, the market has already created a new low. So this candle here is today's candle. That's today, Wednesday. That's already trended below Friday's low. I mean, Tuesday's low. So if I move over to the H1, so this is H1, you can see clearly on the H1 that we're already below yesterday's low price. This year, yesterday's low price. We've already moved below yesterday's low price. With that being said, there's a tendency for us to continue lower, very possible. So we might not continue lower all the way down to this point you see here. Look at this low, particular low I am marking down here. We might continue lower all the way down to this region. If that happens, this can happen with fundamentals that we're expecting to drop. Very, very possible. So on the dollar index, technically speaking, you can see we have just commenced a downtrend, dollar index. You can see we've just commenced a movement to the downside, and you can see from yesterday to this morning, we've gone down. The monthly level, that is on G1, can also see a steady decline, continuous decline to the downside. If I draw my trend line from the high up here, all the way down, points, if I draw my trend line from that high, you can see that we started a trend to the downside. Yes, so there's a possibility of a retracement, but that retracement may not be this month again. There's a tendency for next month to retrace somewhere high before we continue down. So, but for today, since most of us are day traders, I'm anticipating that continue to see the dollar continue its decline down to the downside. Now, with that being said, a currency like Pound USD also follow suit. Now, take note that for tomorrow, we have a very important event on the pound. So there's rate decision on the pound tomorrow, deciding whether the interest rate should be increased or reduced. But from the data we have so far, there's a high tendency for the rate to be reduced tomorrow. Let's see if I'm not mistaken. Excellent. Wednesday. Yes. So we have the interest rates on the pound tomorrow. So they'll be deciding whether it should be increased or reduced. So from the estimate we have, from what we have, it is estimated that the interest rate on the pound will be reduced. Currently 5.25, and the forecast is that it will be cut down to 5. And that is very appropriate because the data so far suggests that there's going to be a decline. So with that being said, whatever positive move that you see in Pound USD may not be it might just be a short move. So if we go over to Pound USD, so this is Pound USD. With the weakness in the dollar, we might see appreciation in the USD JPY, we might see appreciation to the upside. But because of the news tomorrow, we may not see so much move because it's already priced in that the interest rate on the pound will be. So if that happens, then we should see further depreciation to the downside. Take note that while the dollar will be weakening, the pound could be weaker than the dollar. That's very possible. So two currencies can be weak, but still trend particular direction. It just means that one is weaker than the other. So for the British pound, for today, since we are looking at today's event, I will be anticipating that, first of all, the news on the euro should cause the British pound to appreciate. Remember, the CPI for euro on euro. So I want to see the pound appreciate based on that news. And then later in the evening, we see a depreciation in our appreciation. So let's say, for those of us that want to take advantage of today's news, where we are now is ripe for an entry. So for those of us that want to trade, we are at the region where we can anticipate a buy. So if you look at this shabby area, this area that we see several rejections, the tendency for us to continue higher from this point. And if we see higher from this point, we do not expect the instrument to go too far, having in mind that tomorrow we have interest rates on the pound. So I want to see, or I will take profit if I'm to enter any trade on the pound, I will most likely target tomorrow's high price. So I mean yesterday's high price rather. So this blue line you see on my chart, highest price from yesterday, that's the yesterday's high. So what I'm anticipating at this point is an appreciation from this point all the way up to that particular region. So I want to see the market appreciate all the way up. Now, there's a possibility it might go beyond that, but for safety, I want to exit my trade once the market breaks above this particular high. So if you are taking a trade on the pound USD, an entry at the current market price is ideal. You wish for a further retracement, ensure that the market doesn't retrace below yesterday's low price. You should keep an eye on yesterday's low price. Now, where is yesterday's low price? Yesterday's low price is level you're seeing here. So this is the lowest price from yesterday. So long as the market stays above this level, I'll still be considering a buy. So if I'm entering a trade from where I am currently, I want to see my stop loss or place my stop loss below this region with a take profit above the high. Some persons might want to wait for a much deeper retracement. You want to see the market retrace further before you buy. Yes, you can still do that. But for those of us that want to take advantage of the current move and buy from where we are currently. Now, if you look at the market structurally, you can see that we are beginning to experience a failure in the structure, which means we've been in a downtrend. You can see the movement of the downside from days back. So if I draw my trend line, so look at what I'm doing now. If I draw my trend line from, let me pick any of these highs. Let's pick this. Draw a trend line from that point all the way down. Now you can see we've been creating new lows. This new low, if you go back time, the 18th of July, you can see that steadily we'll be creating new lows. And for the first time in a long while, just created a low that is higher than the previous low. So this first low, that is yesterday's low price, higher than the previous low. So what I'm seeing in essence is we have something that looks like what we are currently experiencing, a low that looks like. So you can see what I've just drawn on my screen. So with this being said, there's a tendency for a breakout to the upside. So remember, breakout could be to the upside or to the downside. But with fundamentals on our side, I'm saying there's a possibility for us to break to the upside. Now that break to the upside could be a false breakout, but we can take advantage of it. And why am I mean it a false breakout? Because of tomorrow's event. Because of tomorrow's event, any move I see on the pound today, I will consider that a false breakout. So there's tendency for the market to break out of this falling wedge. And if that happens, we can take advantage of it. So from the current market price, somebody who wants to go in can go in high and then take your profits up there, but ensure that your stop loss is below yesterday's low price. All right, so if we go on to the euro dollar, so this is euro USD. On the euro USD, you notice that sometimes the euro and the dollar move in sync, they move together. But at some other time, there could be a diversion or a deviation from the movement. So currently, we are experiencing that deviation in movement in euro USD and the pound USD. You can see very clearly that on the pound USD, have an inverted head and shoulder, something that looks like an inverted head and shoulder. What that means is this is our level, look at this low down here, and then take note that we have another low down here. So let me remove this box. So look at the levels I'm marking with the gray box. So we have this other low down here, and just created a new low. So this is it. So we now have our inverted head and shoulder. If I switch to a line chart, it more clearly. So this line chart, you can see the line chart showing us that we have an inverted head and shoulder. An inverted head and shoulder is a sign of a failure of a downtrend. It means that the downtrend is most likely experiencing weakness in the trend to the downside. So there's a tendency for us to proceed higher. So what I want to see on Euro USD is kind of move, something that looks like this, very possible. But take note that there's news on the Euro CPI. Now that news, from my estimate, I'm hoping it turns out to be negative. Now, if it's negative, there's a tendency for the currency to push lower, but I will be watching this particular low. So I'm looking at yesterday's low, push lower, but I do not want to see it fall below yesterday's low price. Falls below yesterday's low price, then we have to reanalyze. We have to, the analysis again. Else, I want to see the market push lower for a move to the upside. And that is because my estimate on the CPI in Europe, I'm estimating it's going to be negative. So I want to see it fall and rise. But in the long term, I would prefer to buy the euro, Euro USD, and sell. So if you look at the current price action, you can see clearly that we have formed what looks like an inverted head and shoulder. And if that happens, then we should see the euro. Now, what if the news on the euro, that is the CPI, doesn't turn out to be negative and it turns out to be positive? Then our trades play it out very well. Then we will see the market appreciate. Or in all, whether it turns out negative or positive, I will want to see the market push to the upside based on the fact that we are looking at incoming weakness in the dollar. So the dollar is likely to be a lot of time. So with that, I want to see the euro. But for those of us that want to go in for trade, are more aggressive, you can buy from where we are currently, or you can wait for the market to fall back down to this level. So I'll be marking this particular level. So let me change the color of this level here. You can look at this green level. So you can wait for the market to deflate or to fall back down to this level marked as green, or this level. Now take note, why am I using that point? I'm using that point because there's what is called a fair value gap between that area. I want to see the market fill up that small fair value gap. I also don't want to see the market exceed yesterday's low price. So long as the market doesn't exceed yesterday's low price, then my analysis is play. But once we fall below yesterday's low price, then this analysis becomes invalid. So there's no need considering a buy if it falls below yesterday's low price. But so long as we stay above yesterday's low price, then our buy trade is still in vogue. All right. So please, for those of us that are listening, if you have any question, feel free to drop your question in the chat. I'll soon go through those questions. So we've looked at Euro USD. Now, I said I have a trade on NZD JPY. So this is NZD JPY. I have a sell trade on NZD JPY. My choice of NZD is because NZD is one of the weakest currencies so far, and CAD is another weak currency. So I sell trade on. Now this move you see was the interest rate increase by the day. Before the news dropped, market fell to the downside, then rose back up. That was because it was already anticipated news was going to be negative. It was already anticipated. That was the drop. Then it pushed back up. Then we see a continuation to the downside. For those of us that are interested in NZD JPY, where we are currently, is a good opportunity for us to continue selling. I actually sold from around up here, then entered again at that level. So from where we are now, we take our trade, it will continue lower. Secondly, if you look at the charts, you can see clearly that we've already broken yesterday's low price from yesterday. So what that simply tells you is that we've created a new low. Haven't created a new low, there's a tendency for us to continue lower. We've created a low below yesterday's low price. If I pull up my feed, also notice that I've retraced appropriately. Look at this move to the downside. So let me. So I had just drawn my fib. So what I'm drawing now is my fib. So I've drawn my fib from the high of yesterday, and I'm dragging the fib to the low of yesterday. So from the highest price of yesterday to the lowest price of yesterday, you can clearly see that we have retraced appropriately. Yes, it is estimated that whenever the market has an impulse move, there should be a retracement to at least 1.8% of that move. You can see we've retraced to around 50%, which is still good, still appropriate. It's okay. We don't have to get to 1.8. So the retracement on this move down has occurred, which is where we are currently. So which means from here, we should expect to see further decline to the downside, coupled with the fact that for more than 30 years, I've been more than 25 years, second time the BOJ in their interest rate. So which means there's a high tendency for the Japanese yen to be strengthened in the long term. We can sell. Now, if you have taken a sell as of when I mentioned that, you have been in small profit by now. You can sell even if the market is pushing down. So you can see the small retracement, you can sell, even where we are currently, you can still sell all the way down to yesterday's low price. So for those that may not want to hold the trade longer and target yesterday's low price, the stop loss above this high that is shown up here. The same instrument or the same thing I expect to see on the CAD JPY. So I'm currently in NZD JPY for a sell, and then CAD JPY for a sell. So the same scenario plays out on the CAD JPY. All right. Let me quickly look at the question I have available. And then, right. So I have what's the meaning of fair value gap? This one is asking US 100. Does time frame matter when analyzing? Yes. What? All right. So someone is asking if time frame matters. Please, can you check AUD JPY? Yes, AUD JPY will depreciate. So the same thing that happens on NZD JPY, take the same move on AUD JPY and also CAD JPY. I would not want to go for AUD JPY because AUD is actually not that weak. It's weak, but not as weak as NZD. So NZD is one of the weakest. They have there's a possibility of multiple rate cuts starting from next month. So they are going to cut consecutively. And secondly, the economy is already in what is called a technical recession. They can no longer hold their rate for long, and they have to cut back to back in order to bring the economy back to strength. So that being said, the NZD is currently one of the weakest currencies. So this JPY best traded with currencies that are already showing weakness. And NZD and CAD is one of such currencies. AUD has not cut their interest rates yet, even though it's still going to depreciate, not going to depreciate as much as NZD. So for the guy or the person who asked the question about AUD JPY, yes, you can sell AUD JPY. You can sell it, but the better option would be NZD JPY. And then somebody was asking if time frame matters. Yes, time frame matters. The essence of time frame is for you to properly do analysis. Time frame, in my opinion, does not really make someone profitable enough. So that is why there are usually no best time frames. There are no best time frames. It all depends on your style of trading. So there's nothing like a proper time frame. Your style of trading will determine what kind of time frame. Even some persons who are scalpers can decide to use higher time frame for the analysis and then go in on a lower time frame. So they use a lower time frame for entry and do the analysis on the higher time frame. The higher time frame or the time frames are just an opportunity for you to look at the market, at a different level. Like when you have a microscope and you want to zoom in on an object, when you want to see the intricacies or the hidden qualities or the hidden object, use a microscope so that you can look into what is happening. Time frames are just for you to look far into what is actually happening in the market. and for you to also see a broader picture of what's happening in the market. So you can use any time frame, but you first of all need to know the kind of trader you are. What style of trading do you want to do? Are you a swing trader? Are you a scalper? Are you a day trader? If you are a day trader, there are certain time frames that are happening. That does not mean you cannot use other time frames. You can use any time frame, but there are certain time frames that are recommended if you are a day trader. And these time frames are your M50, your H1, and your H4. These are recommended time frame for a day trader. But that does not mean you cannot look at higher time frame like your D1 and your W1. And there are no set rules as to what time frame should be used when it comes to trading. You that should know kind of trader you are, and then you pick one. Then if you're a scalper, then you are looking at something like the M1, M50, and M5. M1, M5, and M15 for scalper. But it doesn't mean you cannot look at higher time frame also. For M1, M5, and M15 are the recommended time frame for a scalper. So as a scalper, you can decide to look at higher time frame to see what's happening overall in the market. There's no right or wrong when it comes to choosing time frame. I want to please, if your question has been answered, the person who asked that question, please let me know that question is answered. So someone is also asking about pound JPY. For pound JPY, you should expect to see the same move. Anytime there's a movement on JPY, expect to see a similar move on virtually all currencies with JPY. The only difference is the volatility or the magnitude to which they move differ. The magnitude or the extent to which the move is occurring on these pairs with, but you should definitely see movement in similar direction on all the currencies. So for pound JPY, expect to see a movement to the downside, pound JPY. But the pound is not actually weak. It's not really weak. So like I mentioned earlier, the better option would be NZD-JPY. If you already have a trade on pound JPY, you have a trade on pound JPY, then you should be thinking of selling more, buying. If you look at the trend for the past, in fact, for this day as a whole, from January this year, you'll see that pound JPY has been in an uptrend. Then there's a need for a correction, deep retracement. There's going to be a very deep retracement. That deep retracement is what we are currently experiencing. We can go deeper than where we are. We can go deeper where we are currently. So expect the same move. All right. So I've seen a lot of messages asking us to look at gold. Yes, I know all of you want to look at gold. So we'll go to gold now. All right. So I think on the currency pairs, we've done enough. Please, if you see have any currency pair you want us to quickly look at, then you can let me know. In my opinion, if you can see closely that the fundamentals are the king of the market actually. Fundamentals are the reasons the market behaves the way they behave technically. Without the fundamentals, there will be no technical move. There will be no technicals in the market. With fundamentals, we can have a clear direction. Now, if you look at gold, having analyzed the dollar index and seeing how the dollar index is currently behaving, and the prospect of a rate cut, I mean a rate hold. Remember I said if the interest rate is kept as it is, that is this afternoon, there's going to be, is it afternoon or evening? This evening, there's going to be an interest rate decision on the dollar. Now, when that happens, the time is around, what's the time for that news? The time for that news is 7 p.m. At 7 p.m. Now, the current interest rate is 5.5. It is estimated to stay at 5.5. Take notes. It is estimated to stay at 5.5. Now, if it stays at 5.5, then expect the dollar to dip, because it then means that analysts are correct. Analysts, let me just give you a brief. Analysts are suggesting that for this month, the interest rate should be kept as it is, and then for next month, it should be reduced. And then for September, it should also be cut. So we are expecting at least 2 rate cuts this year. So this current month will be the last time they will hold this rate. So if you look at the focus is saying that, hey, they should announce a hold on the interest rate. That is, the number should remain 5.5. Now, if that happens, then it means that there's a tendency. It means that the analysis is correct. The focus is correct. That next month they will cut, and then the month to follow they will also cut. So 2 months back to back, there will be a cut. If that is going to happen, if cutting will start August, right? It was supposed to start September, but with the way the data have been showing weakness in the labor market and then the drop in the consumers price index, there's a tendency this cutting will start August and then also September. Now, if that happens, you will now, what you will experience in the market is cash flowing from the dollar to safe havens. Money will begin to flow from dollar to safe haven. That flow from the dollar to other safe haven, like the gold, like CHF, currencies like CHF should appreciate. Assets like gold and silver should appreciate. AUD should appreciate. So if that happens, this asset should appreciate. Now, this flow will not occur next month. It will not start next month. It's going to start from this month. Remember that we are already at the end of this month, so the new month is already beginning. So from now towards when the next rate decision will be announced, see the dollar depreciating value, because already at that point it's already being priced in that the rate will be cut. The next rate decision will be a cut of the rate. And if that is going to happen, the moves will start now. So with that being said, we should expect to see further appreciation in gold. Gold should continue its appreciation to the upside. Now, gold gave us a sign some days back that kind of suggested that it was going to drop. It gave us a pattern that looks like a drop, but it moved according to the pattern, but the move was not long. Okay, it actually did move. So the pattern I'm referring to was this. So if you look at this, I'm on gold currently. I want to just show you this. So if you look at this and this particular low down here, and this low, so an inverted head and shoulder. I actually took advantage of this. So this is an inverted head and shoulder, and we see good appreciation power. Now, after this appreciation, there would most likely be a retracement of that move. So what I'm going to show you now, if I look at the beginning of this move, look at this move from this low down here all the way up to where we are currently. Now, if I draw my fee, so please permit me to use my Fibonacci. That is the only tool I use when I'm trading. So I draw my fee from this low down here. So I'm targeting the recent move up that has just occurred, the move to the upside that has just occurred. So I have just dragged my fee from this low down here all the way to the move up. Now, this retracement is appropriate because it is at our 61.8. So there have been a retracement to around our 61.8 retracement. So you can see 61.8 appropriate. So which means after this retracement, we should now see almost this same leg, this move to the upside. That is from this point here all the way up here. We should see a similar move to the upside. If I shrink my chart a little, you see on my Fibonacci, I have these levels that are shown up here. Let me mark this point up here. So I have these levels that are shown up here. So look at these levels marked. So it means that there's a tendency for gold to appreciate all the way to 2551. 2551. So having retraced this much, then we should see another expansion all the way up to around that value, 255. With that being said, I would expect a continuation to the upside on gold. So I want to see the market continue higher on gold. And that is in line with the fundamentals that is available. So we should continue to see appreciation in gold. If you look at today, so I'm on a, so let's go to H1. So you can see clearly that on the H1 time frame, we've just created a new high. So what do I mean by a new high? Look at yesterday's high price. This is the highest price from yesterday. And now we just created a high that is above that high. What I will be expecting is a little retracement, a shallow retracement, and then a continuation to the upside. So I will want to see the market retrace to around this area. I want to see the market retrace to around this area before we continue higher. I'm going in on a buy on gold, what I expect to see. A retracement down to around here. And then from that region, a push high. Then from this region, so look at what I have on my screen. So on M15, this is what I want to see. I want to see something of this nature. Something of this nature. It drops down to around this area, and then we push. Now, if this happens, then if we drop down to that region, then I can take aggressive moves, or that can that have deep pockets. You can buy from where we are currently, then place your stop loss below this particular low. That will not be too much. But for those that want to be conservative, then you want to see a mild retracement, which is most likely going to occur. Once we see a retracement down to around this area, remember this area also turns out to be the level from yesterday. This is yesterday's high price. Yesterday's high price. Drag this blue line. You can see this blue line. That's yesterday's high price. I want to see the market retrace down above that line to retrace. You remember that whenever the market breaks a support or a resistance, there's usually a retest of that level. So this line I have drawn, this blue line, yesterday's highest price. Market broke above that level. That level is yesterday's high price. Some will call it, resistance that has turned to support. It doesn't matter what name you call it. Most important thing is that the level of significance. And that's the reason why the market had to move this much in order to break through it. You can see the size of the candle that was required to break above this particular point on this particular level. So with that being said, you would expect theoretically the market should retrace to around this same region before it will continue higher. But we have experienced an impulse, then we should also expect a pullback. And after the pullback, another impulse. So for gold, I'll be much more comfortable buying from around this particular area. So if gold can pull back to this region, I will buy from this area with a stop loss below this point, take profits to the next high. So that's the analysis. That's my analysis on gold. So someone is asking a question. So some persons are already saying they are on profit. I don't know which currency you are on profit. Would you guys go to buy this first? So I don't know which currency you guys are making the profit on. Nice to know that some persons are making profit. Let's do analysis. All right. Now, someone is saying that yesterday analysis, they were told that gold is a downtrend. Now, have in mind that we have different styles and method of analysis. Yes, even while I'm saying gold is going higher, you can still sell and make profit, true or false. You can still sell and make profit. For instance, if I'm anticipating that gold retrace down to where we are currently, somebody can see the analysis and see it as a sell and sell to that point. Somebody can see the analysis. All right. So somebody can see the analysis and then say this is a sell. When it comes to these analysis, actually, I don't think there's any right. Yes. How you manage your rate matters. All right. So even when somebody tells me that something is selling, I can buy and make profit. Somebody tells me something is buying, I can still find opportunity to sell and make profit. All depends. My own analysis is strictly based on the fundamentals I have available to me. My analysis is not just technical level, but fact. Honestly, I don't even do, I do more fundamentals than technicals. And then the fundamentals uh, are on a different level. All right, so someone is asking, please, sir, what's the proper way to use your feed? Now, your feed is drawn from an impulse. So when you are drawing your feed, once identify an impulse move. What do I mean by impulse move? An impulse move, if you look at my price charts, you can see this massive move to the upside. That's an impulse. There's a theory that states that whenever there's an impulse move to the upside like this, there's usually a retracement that the market will usually retrace at most 1.8% of that move. So if I'm targeting a retracement, so currently I want to believe you're seeing my chart. So please look at my chart, look at my cursor. I'm referring to this move to the upside. This is a massive move. This is an impulse move. Now the theory states that whenever there's an impulse move like this, there's likely going to be a retracement to at most 1.8% of that move, which means if you draw your feed from the low, look at the low of this move, and extend it to the high of this move, 1.8% is around somewhere here. So it states that there's going to be a retracement to around that region before we continue higher. So when you see an impulse move to the upside, your feed is drawn from the lowest point of that move to the highest point of the move. And then you expect a retracement to at most 1.8% of that move. So in a movement to the downside, there's a move to the downside, then you draw your feed from the highest price to the lowest, and then expect a retracement to the upside to at most 61.8%. All right, so I want to believe I've answered the question. That means we are on moon. All right, so another question I have here is, someone is asking, how can I identify yesterday's high price and yesterday's low price? Fine, good question. Now, yesterday's high price, simply the highest price that has been recorded from yesterday. Now, how do you know yesterday? Look at my chart. Look at this vertical line you see here. This vertical line, they are called period separators. They are separating the chart on a daily basis. If you are on any of these time frames, you are using M1, M5, M15, and H1. Then this period separator shows you the movement per day. If you are using M1, M5, M15, M30, and H1, then these period separators are daily demarcation. So the highest price for yesterday is the highest price that was recorded. That is the peak of that yesterday's move. So for yesterday, this is the highest. Look at this blue line. That's the highest price from yesterday. And the lowest price of yesterday is the low that was created yesterday. That is this point down here. That is your high and your low of yesterday. All right, so I want to believe that question is answered. Then next, someone is asking NZD-JPY. So you just sent NZD-JPY without giving me any reply. So for those of us that took the trade on NZD-JPY, or that trade on NZD-JPY, let me know how the trade is going. A trade on NZD-JPY, please let me know how the trade is going. And if you also took a trade on CAD-JPY, let me know how the trade is also going. So I can tell you that on those assets, I'm in very crazy profits. Those assets I have just made. All right, so let's continue, please. Okay, so at this moment in time, all right, so someone is saying money made. So at this moment in time, I'm only going through the questions I have Yeah, so our time is already up. So I'm just trying to answer all the questions before round up. So someone, please, NZDJPY on massive profit. Okay, that's good. So just like we said, NZDJPY and the others should be profit. All right, so you have to edit the color. You have to edit the color. I might not have time to show you how to edit the color. This what's the best way to analyze gold and be profitable. How can I get session break? All right, so to get session break on your laptop, MT5, it's Control Y. So you do Control Y. So, Control, did I say Control? Yes, Control Y. Control Y should give you session break. Market will create an imbalance. Yes, that is true. So yes, Esther is saying market will create an imbalance and retrace onto it before continuing up. Very correct. Very, very correct. Then this one is saying from fundamental knowledge should buy and sell, buy now and leave it at the news. For those of us that from Benson is asking a question, if should he buy and then leave it throughout the news, I would want to close my trade before FOMC. Whatever trade I'm currently in now, I will close my trades before FOMC. How do you install period separator? You don't install the period separator. It's already on your chart. You just apply it on the chart. For instance, you right-click on your chart, and go to properties. I'm using MT5. Right-click on the chart, then you go to properties. Now right-click on the chart, go to properties, click on show. Click on show. You will see show period separator, tick it. So for those of us that are asking the question how to put the period separator, right-click on your chart and then click on properties. I mean, right-click on anywhere on your chart. Down here, look at down here, you will see properties. Click on properties. And then click on show. Look at show. And then you will see show period separator. Check it. Once you check it, you will see the separator applied on your chart. Can we close NZDJPY? Yes, you can close NZDJPY, but I'm holding it much longer, much longer. But for those of us that have made good profits, you can close. I will be holding it much more longer, up to you around FOMC. And so, what is the strategy behind high of the day? All right, so guys, thank you very much. Has been a lovely. While you trade today, ensure that you have stop losses in place. If you have entered any of these trades and you are in profit, on any of these trades, you can break even. You can move your stop loss where you're entering right now and secure your profits and then allow the market, allow the trade to continue. So thank you so much for time. And for those of us that missed the program, that missed this particular session, and always go back to our YouTube page. This particular session will be uploaded on our YouTube. And go back there and watch the version. I'm sorry for those that I was unable to answer their question. Please don't be angry with me. My time is already up. I want that maybe some other time when we meet. And then for those that feel their questions are still not answered, you can always reach out to me, any of your trainers, any of the trainers in your area, there in Lagos, Abuja, and then you can reach out to the trainers and then ask any of these. Ask. Thank you so much. Someone is asking for my name. My name is Don Deyo. Type my name. My name is Don Deyo, and doing this presentation from Dakot. My name is just sent in my name again. That's my name, and doing the presentation. Dakot. Thank you once again.